5. It's a nice round number. Is there significance for Nvidia crossing this milestone beyond? It just sounds really good.
Well, it is just a number, but it is a stunning number. If you think about the growth that Nvidia has seen this year, close to 50% growth on the back of this continuing exploding AI infrastructure buildout. Now, the thing is, the bigger the number gets, the higher your revenue and profit has to be over time to justify it. I think there are still a lot of ifs in this AI buildout to see whether it is going to continue building apace. A lot of things have to work out. Enterprises have to get a lot more value out of the current slate of AI in order to justify these massive valuations. But the one thing that might be able to do it is the US allowing Nvidia to start selling that Blackwell chip into China, where there would be insatiable demand for it. And so the president even winking about it, it makes sense to me after that happened, that we're seeing Nvidia now flirt or even exceed that $5 trillion, wild to say it, $5 trillion market cap.
Alex, it's so funny that you believe, at least, there's going to be insatiable demand for Nvidia's chips in China, because it was just a few weeks ago where we heard those reports that domestic tech companies in China were creating their own chips that they thought could rival Nvidia's chips. So if that does play out that way, the president allows the most advanced AI chips into China and there is insatiable demand, does that just kind of remove those questions about this being a bubble?
I don't think it removes the questions about it being a bubble, because China will have the same questions that we have here in the US, which is, where is the return on investment, and how do you make sure that when you're putting those dollars into the infrastructure build out, you're going to get money out at the end of the pathway here. So those questions are still in play, but I do think that China spending on these chips would definitely help at least ease some of the concern that it's going to fall off in the short term.
All right, I want to get some of the earnings after the bell. Let's start with Microsoft. You say Microsoft's having a great week because of a deal to secure a 27% stake in OpenAI and also secure their IP. You think that's really important. I want to go back to Microsoft's report. So for its cloud business, for Azure, the estimate is 38% growth for this quarter, 37% growth for the next quarter. With this deal in place and this relationship really cemented, should we be relooking at how we view Azure and the growth there? Should it grow faster because of this relationship?
I mean, the growth in Azure is unbelievable. If you think about Azure's growth in the mid to high 30s compared to AWS growth in the high teens, you see that Azure is gaining ground. Of course, AWS has a higher base, but this sheen that it's going to continue to have, because it is basically locked down OpenAI IP until 2032, is going to be very important. So there were some concerns. If this spin out or if this restructuring of OpenAI didn't go the way that Microsoft wanted, would it change the fundamental relationship that the company has with OpenAI? But it doesn't look like that relationship is going to be changing at all. And that is a key advantage that Microsoft holds over its closest rivals, but especially Amazon, which just doesn't have a relationship like that with a lab like OpenAI.
Really quick, because I want to get to the other two earnings reports, but cementing this relationship, shouldn't this be a boost for that cloud infrastructure business, the fact that now these two are so closely tied together?
Well, it's a little bit different, in my opinion, Frank, because what I think Microsoft has done here is it's secured a very large percentage of OpenAI over time, but it's also ceded a little bit of the build out to others, to the Oracles and Nvidias of the world. I think that's a smart move by Microsoft. What it's saying is, we're going to take a large percentage of the upside of OpenAI from here on out, but we're not going to bet our entire company on building the infrastructure that it needs to train and run its models. So that's where I see Microsoft. You might actually see less of a spend from OpenAI coming into Azure.
Okay.
However, the Microsoft does have a stake, and that's really important.
Alex, let me interrupt you just for a second. Right now, we're taking a live look at South Korea, where the president, obviously, they are visiting. He's meeting with the South Korean president right now. It looks like he's taking some pictures. This visit to South Korea is ahead of a sit-down with Chinese President Xi Jinping. The president right now, I believe he may be taking some questions. We're hearing a little bit of sound. Of course, again, the big story here is the sit-down with Xi Jinping. But right now, the president just kind of doing some meet and greets. We're going to continue to watch this situation for any comments from the president or any other developments. All right, Alex, I want to turn back to you right now. Alphabet also reporting after the bell today, another big earnings report. A lot of talk about Alphabet actually taking market share when it comes to AI workloads. But on the other side of the coin, its search business seems to be under some pressure. A lot of talk about zero search clicks as well. We've heard Cloudflare CEO Matthew Prince talk about it. A lot of the companies talk about it. How concerning is the idea of AI taken away from that business?
Long term, it's definitely a concern. I mean, this has been the overhang for Alphabet from the beginning of this moment, since ChatGPT launched nearly 3 years ago, was that people would eventually move their search from the Google search bar into the chat window. Now, Google has some really impressive efforts that are underway within the company, and they're being aggressive. Right now, you can search a traditional Google search, but right next to it, you have AI mode. But I think, look, we're 3 years in. ChatGPT has 800 million weekly active users, making it the fastest growing product in history. And even still, we're going to see double-digit growth in Alphabet's search business. So I think that tells you all you need to know about the near-term threat to Alphabet. It's not as bad as a lot of people are making it out to be. It's obviously survived these early days and really thrived in these early days of generative AI and has shown the willingness to be aggressive. But over the long term, that concern is not going away.
All right, we got to hit on Meta as well. When it comes to Meta, actually, we had a guest on yesterday saying that Meta is the most sensitive if AI is a bubble. Those concerns don't seem to be front and present right now, especially after what we're seeing Nvidia cross that $5 trillion market cap in the pre-market. But I do want to ask you, CapEx spending, is there too much when it comes to Meta? Is there a risk of it just being too much? The guidance is 66 to 72 billion for this year. When it comes to the guidance for next year, is there something that would make investors pull back and be worried about the money that they're spending?
You know, it's interesting that your guest yesterday said that. I think Meta is the most sensitive if this AI thing works out. We're already seeing people starting to go from interacting with human friends online, which is what Meta's entire business is built around, to interacting with AI friends online. This is a thing that millions of people are already doing today, and as the technology gets better, it's just going to be an increasing threat for Meta. I think that's really underestimated when people think about Meta's business, is the fact that people are going to want to spend more and more time with these chatbots, and Meta is a time spent company. It's all about engagement. So really, when I think about Meta, there is no limit to the CapEx that the company should put into building, its version of AI, because if it sits this one out, it could really be looking behind the rest of the internet when it comes to this new interaction layer with technology and have nothing. So if I'm Mark Zuckerberg, I'm spending big time.